It is 9:35 a.m. Pacific Daylight Time. It is the 12th day of May, 2025, and this is episode 1093 of Bitcoin. And, well, it looks like we might have some relief on the tariff front. That news broke yesterday, but we got details today, and it's actually fairly substantial. I'm actually kind of surprised. Why are you here? You're here for all the news that you can use when it comes to Bitcoin and the way the macroeconomic environment affects it. And you, by the way. So we're going to get into several news stories today, including one about David Bailey. And then we've got, well, American Bitcoin mining, the Trump-linked miner, is already making some kind of merger, which I find odd. It's like barely off the ground, and it's already looking at a merger. And then we've got, well, there's some, well, I don't really know what to call it, shooting themselves in the foot over there at Coinbase. Yeah, we'll talk about it, I promise. Oregon has passed a law concerning Bitcoin, and then we've got two people in the news, Matador and Strategy, are both buying Bitcoin, but the Matador story is way more interesting than Strategy. But I had to remind somebody on Twitter. Yes, I've been on Twitter a couple of times just to see the wreckage that is the Knots versus Core situation. I might get into that one a little bit, but they were talking about wearing Bitcoin swag, and that means like T-shirts and hats and purses and socks and pants and whatever else at a conference, at specifically a Bitcoin conference, to which I had to remind them, and I remind people all the time, don't do that. Don't fly your flag. It's not worth it, because we've got a kidnapped man in Las Vegas. But let's go back to the tariffs. Bitcoin sinks and stocks rise after the United States and China scale back tariffs. This is James Rubin writing for Decrypt. Bitcoin and major altcoins surged early on Monday, but then dropped back down after the United States and China formally announced that they were scaling back the draconian tariffs on one another that have been weighing on investors for weeks. The largest cryptocurrency by market capitalization was recently trading at $102,000, which was down 1.5% over the past 24 hours, according to data providers. Now, Bitcoin briefly rose above 105,500 for the first time since January, before United States markets opened, but then immediately retreated. Quote, Bitcoin's rally above 105,000 this morning appears to be a direct response to the easing of United States-China trade tensions, wrote Joe DePasquale, CEO of crypto fund manager BitBull Capital. Quote, the announcement of a 90-day tariff truce has injected optimism. Yay! Optimism into the global markets, end quote. DePasquale added that the escalation also enhances the appeal of decentralized assets like Bitcoin, which are often viewed as hedges against geopolitical instability, let's just say. However, DePasquale noted warily, quote, this truce is temporary. It's temporary, ladies and gentlemen, and the underlying trade issue remains unresolved, which could reintroduce volatility in the near term. Bitcoin's pullback from its $105,000 price scale highly underscores just how sensitive the market remains to shifting macro narratives, especially when moves are driven by more sentiment than structural flows. And following weekend talks, the United States and China said that the countries each would cut their retaliatory tariffs on one another from 125% to 10%, but only for 90 days, while they continue to discuss the ongoing trade war. Those penalties have been weighing heavily upon investors for weeks amid fears that they would raise prices and trigger a global recession. However, risk on assets have risen over the past 3 weeks amid hopeful signs that the United States would ratchet back its trade war, not only against China, but other major partners. Last week, the Trump administration and the UK announced that they had reached a new trade deal, although they were far short of specifics. And then they talk about shitcoin number one. I'm not going to talk about that, nor Solana. They keep on bringing, I hate it when Decrypt does this, but it's, hey, you get the news where you get the news, guys. So we'll just skip all the shitcoin talk and go straight to the real shitcoins, equities, which spiked on Monday's news, with the tech-heavy NASDAQ climbing 3.4% and the S&P 500 up more than 2.4%. Both indices have risen more than 7% over the past month, with most of those gains occurring since late April. Bitcoin has jumped roughly 21%, a solid move over the past month, with some analysts saying that it has appeared to behave more like a safe haven asset as of late. Quote, investor sentiment may find support from the growing political engagement with crypto, particularly as figures like Vice President J.D. Vance preparing to take the stage at Bitcoin Vegas on May the 28th, signaling that digital assets are increasingly part of the national economic conversation. Okay, well, whoop-de-doo. So yes, that is another bit of news that I'm not going to cover that much today, is that J.D. Vance is going to, he's going to speak at Bitcoin 2025 in Las Vegas. And we've got other Las Vegas news at the end of the show, and it's not the good kind of news. So why would it be the case that Bitcoin dips and equities rise on this at least short-term relief of trade tensions between the United States and China? Well, I think it was kind of a double whammy. We haven't seen 105,500 price like the news story said since January. Technically speaking, even all other things being equal, let's say there was no tariff news, and it was just this price scaling up, you are going to get a pullback anyway, because this is just the way the cycle it seems to be working over the last few months. We hit these pressure points where people are like, oh, thank God, I've been terrified for 6 months since I first got into Bitcoin, because they've been down. If they got in at the highs of $106,000 to $109,000, then they've been in the red for a while. And there was quite a bit of people that bought in, as usual, at all-time highs. Now, as we reapproach those all-time highs, you're seeing different notches on the way up that represent where people bought in, and they have found out that they are not as thick-skinned as they thought they were, and they immediately sell just so that they can at least break even or come close to breaking even, and they will have fun staying poor because they cannot wait. Their time preference is just too short. They're looking at the next couple of weeks, the next couple of months. Medium term is a year, to 2 or 3 years out, and then longer term is like 5 and 10 to 15 to 25 years out from that. Most of the Bitcoiners that I've kind of come to know and love are, they're way long-term view. Many of them think on time scales that represent, a time after their own death. I know that sounds silly, but, human species used to think that way. We used to think about legacy. We used to think about enduring items that we can build, or at least ideas that we can pass along. And not so much. We've been poisoned by media, not just in the West, but all over the world, to basically think short term, not even really medium term. So that's one issue altogether. The fact that we hit 105, it immediately started decreasing, was just people bailing out of the market so that they could simply break even because they are weak. And they thought they were strong, but they found out that they were not very strong at all. Then we have the trade tariff issue, at least in a resolution in the short term, a 90-day short-term resolution between the United States and China. if no long-term positions are taken by either country on agreements going further into the future than that, then you can expect a reversal of all this shit in 45 days because people will go, okay, we're at the median mark of 90 days and we still don't have any word on a long-term resolution on this trade thing. Maybe we start bailing out. So I expect that to occur if we don't get any long-term trade stuff. But that one aside, equities rose simply because they're like, oh, thank God, we can finally start getting into some of this stuff again. We can finally start deploying our cash, which is, losing value, and we can put it somewhere to do something for us. Well, that's not going to be helpful for the people that are looking for Federal Reserve rate cuts, because Jerome Powell now has even more proof that the economy is doing just fine, and there's no reason to heat up the economy by dropping interest rates, which does what? It makes money or keeps money relatively more expensive to borrow, which is what people love to do when they're going to sink cash into risk assets. So as of today, it is my opinion that Bitcoin looks like more of a risk asset than it does a safe haven asset, even though while I say that, my stomach churns because I know what the truth actually is. I'm talking about the thought processes of the short-term thinker. So between those two issues, the fact that we hit 105.5 and we got people bailing out because they want to break even because they're weak asses, and the fact that now it's less likely that we're going to get cheap money to borrow so that we can throw into quote-unquote risk assets, that's why you're seeing this other side of the decoupling between Bitcoin and equity markets. Jerome Powell is not going to be incentivized whatsoever to drop interest rates anytime soon. You can bet on that. So David Bailey, CEO of Bitcoin Inc., or BTC Inc., whatever the hell it is. Last week, I brought news that he was announcing the Nakamoto Company. Well, we've got more news. David Bailey and Bitcoin native holding company Nakamoto have announced a merger with Kindly MD to establish a Bitcoin treasury. And this is Vivek Sen writing for Bitcoin Magazine, of which is under the umbrella of companies of BTC Inc., which David Bailey is the founder or CEO of. Anyway, Kindly MD Incorporated, which is a Utah-based healthcare services provider. Yes, you read that right. Healthcare service provider has entered into a merger agreement with Nakamoto Holdings Incorporated, a Bitcoin native holding company. Now, the transaction, which was announced, today, this morning, May the 12th, includes $710 million in financing through a combination of private placement and, you guessed it, convertible notes. The merger will create a publicly traded company focused on establishing a Bitcoin treasury strategy with $510 million raised through private placement in public equity and $1.12 per share and $200 million in senior secured convertible notes maturing in 2028. David Bailey, founder of BTC Inc. and Nakamoto Holdings, will serve as CEO of the combined entity. Tim Pickett will continue managing Kindly MD's healthcare operations, which include 4 clinics across Utah providing integrated medical services, pain management, and mental health care. David Bailey, founder and CEO of Nakamoto, said, quote, Nakamoto's vision is to bring Bitcoin to the center of global capital markets, packaging it into equity, debt, preferred shares, and new hybrid structures that every investor can understand and own. Oh, God, Jesus. Our mission is simple. List these instruments on every major exchange in the world, end quote. He continued, quote, Nakamoto is building the first publicly traded conglomerate designed to accelerate that future. The financial institutions who defined their chapter in history have all carried the names of their founders: Medici, Rothschild, Morgan, Goldman. Today, we stake that legacy on Nakamoto, end quote. Okay, I'm sorry. I'm going to have to gag a little bit here. This is beyond hubris, and it's well beyond suit speak. This is just, honestly, this is starting to become delusional. And it's not just David Bailey. It is this fascination with, oh my God, if we can only get Bitcoin to marry up with legacy financial instruments, then everything will be okay. No. And I'm not preaching doom here. It's not really going to matter to Bitcoin, not in the long term. Blocks are still going to be produced. Transactions are still going to be validated. Bitcoin is still going to exchange hands. It's going to do it in a fairly private and mostly decentralized way. And nothing from that standpoint has really changed. But this continual dragging of the dead cat from outside to inside so that you're going to nurse it back to health. And I'm equating the dead cat to legacy markets, legacy finance, legacy, anything that you've seen in the last 100 years is bullshit. And that's what I'm referring to. It's the dead cat. It's your favorite pet. They got caught outside and, I don't know, climbed up a tree and got struck by multiple bolts of lightning, burnt to a fucking crisp, and then fell to the ground. And you, like an idiot, think you're going to go rescue this poor little kitty cat. No, dude, it's dead. And there's no amount of dragging it into a warm, cozy house and setting its corpse by the fire that you're going to be able to resurrect it. It's dead. And yet, here we are, with people that should know better, falling into the trap of the last 100 years. But let's continue. The pipe, which is the whole finance instrument that David Bailey's talking about, the pipe financing attracted over 200 investors globally, including institutional investors such as Acti Ventures and Arrington Capital, BSQ Capital Partners, Kingsway Off the Chain Capital, Parify, RK Capital, Van Eck, and Yorkville Advisors, alongside individuals, including Adam Back, Balaji Srinivasa, I can never pronounce his name, Danny Yang, Eric Simler, which is the CEO of Simler Scientific, Jihan Wu from Bitmain, Ricardo Salinas, the rich guy from Mexico, and Simon Gurovich, who is the CEO of Metaplanet. Ya2PN Ltd., which is an investment fund managed by Yorkville Advisors, was the sole convertible note purchaser. Nobody else wanted the convertible notes. Wow. Whoa, wow. Whoa, that doesn't bode well. Under the agreement, Kindly MD shares will continue trading on NASDAQ under the symbol KDLY until a new ticker symbol is announced, and the combined company's board will consist of 6 directors appointed by Nakamoto and 1 by Kindly MD. The transaction includes the assumption of Nakamoto's marketing services agreement with BTC Incorporated, which will provide marketing services related to Bitcoin treasury operations. And Kindly MD's clinical operations, because, it's a healthcare company, will maintain their current focus on reducing opioid use through integrated healthcare services. The merger requires Kindly MD shareholder approval and is subject to customary closing conditions. Additional transaction details will be available in the current report on Form 8K to be filed with the SEC. What does this have anything to do with healthcare? Somehow or another, I feel like this is a cannibalization of a company that has liquid assets that can be redeployed into this senior convertible note debt instrumentation to purchase BTC so that we can have a Bitcoin holding company, yet another Bitcoin holding company. I'm miffed. Sure. Is there anything I can do about it? No. Am I going to go on about my life? Yes. And you're coming along for the ride because Trump-linked miner American Bitcoin is going public. via their own merger with Griffin. Adrian Zemunsky for Cointelegraph. Bitcoin mining firm American Bitcoin is going public through a merger with crypto mining company Griffin Digital Mining, and the companies announced that again this morning, May the 12th, under the terms of the deal. Griffin Digital Mining, which I've never heard of before in my life, will acquire American Bitcoin in a stock-for-stock transaction. Jesus Christ, why am I laughing? Because Eric Trump and the Trump family just built American Bitcoin, and they're already being bought. Talk about a turnaround. You don't even, I mean, they're Eric Trump, the Trump boys, their old man, he's a real estate developer. Even he doesn't turn around deals this fast, brothers. Oh my God. But after the merger, the new company will operate under the American Bitcoin brand and be led by its board of directors, which includes, of course, Eric Trump, the second eldest of U.S. President Trump's 3 sons. He's the middle child. Sorry. News of the merger coincided with a sharp rise in Griffin Digital Mining's stock price, which climbed from 52 cents on May the 9th to $2.15 at the time of writing, a gain of more than 313% according to Google Finance. The announcement follows early April reports that American Bitcoin was considering an initial public offering. American Bitcoin is a majority-owned subsidiary of energy infrastructure, crypto mining, and data center firm Hut 8. Hut 8 CEO Asher Ganoot said that the company aims to make American Bitcoin a purpose-built vehicle for low-cost Bitcoin accumulation at scale by taking American Bitcoin public. We expect to unlock direct access to dedicated growth capital independent of Hut 8's balance sheet while preserving long-term exposure to Bitcoin upside for our shareholders. End quote. According to the announcement, existing American Bitcoin shareholders will own roughly 98% of the newly formed company. Following the transaction, the new company will control most of the outstanding stock. Hut 8 will continue to manage American Bitcoin's infrastructure and operations through long-term commercial agreements. Those deals are expected, according to the announcement, to generate stable contracted revenue streams for Hut 8's power and digital infrastructure segments. Hut 8 acquired a majority stake in American Bitcoin when it was unveiled at the end of March. End of March. It's when I told you about it, was the end of March, 1st of April. It's been like a month and a half. But it had backing from several members of Trump's family, as I said. The company, formerly known as American Data Center, was founded by a group of investors, including Trump's sons, Donald Trump Jr. and Eric Trump. And following the deal, American Bitcoin took ownership of Hut 8's Bitcoin mining hardware. The announcement at the time explained that the new firm aims to become the world's largest, most efficient pure play Bitcoin miner while building a robust strategic Bitcoin reserve. And that's the end of the article, but they're already being bought by Griffin. And I've never even heard of Griffin. I'm sorry. This has nothing to do with my view on Orange Man or Orange Man's son or Orange Sons. We'll just call them Orange Sons. I don't care. I really don't. But these turnarounds are way too quick for anything that they've described of what they want to do to actually be done. This is supposed to be about mining, and yet we're changing hands twice inside of a month and a half, because essentially that's what's happening. And somebody's making out like bandits. I mean, you've got a 313, was it 313? Let me see, where was that? Yeah, 313% price stock rise in Griffin Digital Mining from 52 cents to $2.15 within 2 days. Well, something stinks. Something stinks here. I don't know what it is. I can't put my finger on it, but my gut feeling says this is dirty pool, old man. And if you feel dirty, you can get clean with SoapMiner. SoapMiner makes soaps. He makes 100% pure beef tallow soaps. You can get it in cedarwood and peppermint and lavender and pine tar and lemongrass, or just regular rough cut tallow soap, which has all of, count them, 1, 2, 3 ingredients: 100% pure beef tallow, lye, and distilled water. If you want the cleanest soap to wipe the dirt and the stink of this particular Griffin deal off your hide, you go to SoapMiner.com. That's SoapMiner.com. If you go to SoapMiner.com and use coupon code Bitcoin, and you'll get 10% off. And if SoapMiner decides that, hey, he made another sale for me, then he's going to cut me some Satoshis, as he always does. He is one of the newest members of the Circle P family of vendors, and the Circle P is where I bring plebs with goods and services to plebs just like you that might want to purchase those goods and services. It's a way for us to build the Bitcoin circular economy, and you can do it by purchasing SoapMiner soaps at SoapMiner.com. Get clean with SoapMiner. Now, back into the dirty pool, old man issue. Talk about diving in head first into a swamp. And you're going to want to keep your SoapMiner soap handy for after this one. Coinbase has abandoned Bitcoin accumulation. It's too risky, says Naked Mole Rat. Atlas21.com is writing this one, as explained by Coinbase Naked Mole Rat CEO Brian Armstrong in an interview. Over the years, the exchange has repeatedly considered the idea of adopting a Bitcoin-focused treasury strategy similar to that of Strategy. However, the company ultimately decided against it in order to mitigate risks that could have jeopardized its liquidity and operations, according to Armstrong. The CEO revealed that the idea of allocating up to 80% of Coinbase's balance sheet to Bitcoin had been considered numerous times over the past, 12 years. Nonetheless, Coinbase prioritized neutrality and financial stability over heavy Bitcoin investments. Armstrong said, quote, "Using such a substantial portion of our balance sheet for Bitcoin could have limited our ability to support future operations. We made a conscious choice about risk." Oh, like the risk of your entire back-end compute system just crashing and burning every time that we get a major swing in the price of Bitcoin? Is that what you consider your risk in operations, Brian? Whatever. Elisa Haas, Coinbase's chief financial officer, pointed out that the decision wasn't solely about risk management. She highlighted that Coinbase deliberately avoided directly competing with its own customers by refraining from speculative Bitcoin investments. Jesus. According to the BitcoinTreasuries.net website, Coinbase currently holds 9,480 BTC valued at nearly $1 billion, ranking it still among the world's top 10 Bitcoin corporate holders. Okay. So for those of you who are new to the space in general, the entire company of Coinbase was built on the back of Bitcoin. Coinbase wouldn't be Coinbase. It wouldn't exist. Brian Armstrong would not have the wealth he has had it not been for Bitcoin sparking this entire thing off. Yet, he actually probably made more of his money selling shitcoiners or shitcoins to shitcoiners and essentially relieving them of their wealth over the past 12 years. That's how he made the bulk of his money. And that's exactly why that's what he's saying. He's like, oh, I don't want to scare people. If we just buy Bitcoin, that's going to send a signal that maybe you should buy Bitcoin, which means he doesn't make as much money on a year-over-year basis because you guys, not you guys, but the shitcoiners out there that really believe Doge is going to go somewhere, like our friend Raul Paul, who actually said that he is thinking that Doge may be a hard asset in the future, but be that as it may. But people like him, that's how Brian Armstrong makes his money. This, honestly, as much as I feel like I should be shocked, I'm actually not shocked at all by this announcement out of Coinbase that they are taking a shit on the very thing that they owe their existence to. Let's run the numbers. Futures and commodities, as I said, the Trump tariff deal seemed to be, well, wagging the dog. We've got oil. West Texas Intermediate well above a 2-point rise to 62.28. Brent North Sea also 2.02% to the upside to 65.20 cents. Natural gas doing its thing. It's down 3.72%. Gasoline itself, however, is up 1.25 to $2.13 a gallon. Gold getting kicked in the scrotum this morning, 3 1/3 to the downside, taking it to 32.31 and a dime. Silver is down 0.7%. Platinum is down 2.5%. Copper is down 0.75 point, while palladium riding low, 4.08% to the downside. Man, shiny metal rocks are not so shiny today. We got a full mix in agricultural futures. Biggest winner looks to be soybean, 1.6% to the upside. Biggest loser is coffee, 3 2/3 point to the downside. Live cattle is up almost a full point. Lean hogs are up 0.61%. Feeder cattle up 1.5%. Here comes the equities. Buckle up. Dow is up 2.5 points. S&P is up 3 points. NASDAQ is up 3.5 points and well over that. S&P Mini is up 3.5 points itself. And here's where it comes. This is the payment for equities going up is that Bitcoin comes down from $105.5 to $103. $103, sorry, I didn't mean to scare you. $103,060, still well above a $2 trillion market cap. You can get 31.8 ounces of shiny metal rocks with your one Bitcoin, of which there are 19,863,638. Almost a palindrome. Average fees per block are slightly elevated today, 0.06 BTC taken in fees on a per block basis. There looks to be 6 blocks carrying 19,000 unconfirmed transactions. High priority rates are fairly high, 11 Satoshis per VByte. Low priority is going to get you in at 7. And the hash rate has fallen. Yay, there's a little bit of minor capitulation. 880 exahashes per second is still nothing to sneeze at. We got a 4.5% difficulty estimate rise coming up April the 12th. So that's sometime today, isn't it? No, I'm reading the wrong thing, y'all. I'm sorry. We have a 4.5% estimated difficulty rise in 4 days, or 686 blocks away. And from Mistaken Shake, which was Friday's episode of Bitcoin, and I got progressively worse with 1,000 sats says, shake and bake, baby. Thank you for all that you do. Yodel with 444 says, cheers to the weekend. Justin with 100 says, happy weekend, brothers and sisters. And Pies with 100 says, thank you, sir. No, thank you. Man, these donations are just really low. Hey, man, if you want to help out the show, man, hit the donate button, man. I got kids to feed, man. They need new shoes and shit like that. That's the weather report. Welcome to part 2 of the news you can use. Oregon has passed a law officially recognizing Bitcoin as collateral. This is one of the first ones that I've heard about that one. I might have mentioned that Oregon passed a Bitcoin law last week, but now we're going to tear into the guts and feathers of what it actually is with Alex Larry from Bitcoin News. Oregon has officially signed Senate Bill 167 into law, making digital assets, including Bitcoin, legal collateral in financial transactions. Governor Tina Kotek signed the bill May the 7th, updating Oregon's Uniform Commercial Code to allow the use of digital assets like Bitcoin as collateral in secured lending. It adds Article 12, which outlines the legal framework for controllable electronic records, which includes digital assets, tokenized records, and electronic money. SB 167 says digital assets can be used just like traditional collateral. That means individuals and businesses can use Bitcoin and other digital assets to secure loans or financial agreements. Before this, there was lots of uncertainty. Companies and financial institutions weren't sure how Bitcoin would fit into the law, especially when it came to using it in commercial contracts, and now SB 167 removes all doubt. It also updates Article 9 of the Uniform Commercial Code to allow digital assets such as Bitcoin as collateral in secured transactions. It also recognizes electronic records, electronic signatures, and hybrid transactions, opening up more blockchain-based business activity. This gives important legal clarity, which could encourage more institutional investors to enter and participate in the markets with more confidence. Oregon is now one of the first states in the United States to clearly define and support the use of digital assets in the legal and financial systems. Analysts say it could trigger similar moves across the country. In fact, the momentum is already building. Arizona and New Hampshire have already passed significant Bitcoin-related bills this week. In Arizona, Governor Katie Hobbs received a lot of criticism after vetoing SB 125 in her own state. After that, she was presented with another Bitcoin-related bill, House Bill 2749, which she did sign into law, creating a state-run Bitcoin and digital asset reserve. Pausing to say just a few words as reminders about what that nothing burger of a bill actually is. It's stupid. Dare I say, it's retarded. It doesn't make any sense at all. It's talking about being able to capture abandoned digital assets for inclusion in a state Bitcoin reserve. How are you going to get it? How are you going to get it? This is a bill that was clearly written by people who don't understand how the majority of crypto works, and certainly don't understand how Bitcoin actually works. It doesn't work the way you think it works. And obviously they sent this bill to a governor who probably knows even less about how this stuff works than the people that wrote the bill. The Arizona bill that got passed does nothing. If she hadn't have gotten any backlash at all, she probably would have vetoed this thing too. But, hey, to save a little bit of face, she's just going to hand over a big nothing burger, which is exactly what the bill is. Now, this news story goes on to say that the new fund allows the state to take custody of, like I said, unclaimed digital assets, but only after 3 years of inactivity, and use them to generate value through staking or airdrops. Again, what the hell does that even mean? Nothing. It means nothing. These people have literally no idea what legislation they crafted. Katie has no idea what she signed. Jeff Winninger, chair of the Arizona House Committee Commerce Committee, said, quote, "Digital assets aren't the future, they're the present. We've built a structure that protects property rights, respects ownership, and gives the state tools to account for a new category of value in the economy." Arizona also signed another bill, Senate Bill 1373, pending with the governor. If signed, that one will allow Arizona's treasurer to allocate up to 10% of the budget stabilization fund into Bitcoin, turning it into a strategic financial head. And above all of that, New Hampshire became the very first state in the union to legally enable the creation of a strategic Bitcoin reserve thanks to House Bill 302. And then it goes on to say, these developments mean Bitcoin rocks. Okay, whatever. If Katie in Arizona signs the actual bill 1373 that allows the Arizona Budget Stabilization Fund to purchase Bitcoin, that's meaningful. That one actually has real teeth. It's got real guts and feathers on it. What she signed into law means nothing. Arizona effectively hasn't done dick. So don't let anybody tell you different on that one. Now, on to Matador Technologies, raising 1 million Canadian dollars to invest in Bitcoin. Oscar Zaraga Perez from Bitcoin Magazine is writing this one. Matador Technologies Incorporated, a Bitcoin-focused tech and investment company, just announced a non-brokered private placement of up to, and follow along here, people, 5,454,546 units. That's going to be important later, priced at 55 cents each. The total amount that Matador expects to raise is $3 million in gross proceeds, and that's Canadian dollars. The funds raised will be allocated into 3 equal parts. 1/3 will be used to buy Bitcoin, which lines up with the company's continued interest in adding Bitcoin to their Bitcoin reserves. Another third will go towards expanding their gold acquisition plans and growing the Grammys business initiative. Grammys, I don't know what that is. Maybe we'll find out. The final third will cover general corporate needs like, operations, admin costs, and new business opportunities that might come up. Each unit, and this goes back to this 5.5 million units at 55 cents each. Okay, here's the definition of what the unit is. It includes 1 common share and 1/2 of a common share purchase warrant. Oh, gee, that explained it. 1 full warrant gives the holder the right to buy an additional share at 75 cents. Oh, so it's a promissory note kind of thing. These warrants are valid for 12 months, starting from the date that they're issued. There's also an acceleration clause. If the company's stock hits $1.05 or more for 5 straight trading days on the TSX Venture Exchange, but only after 4 months and 1 day from closing, Matador can speed up the expiration of the warrants. If that happens, they'll issue a press release and the new expiry date will be 30 days after the notice is made public. All securities from this offering will be under a statutory hold period of 4 months and 1 day as required by Canadian securities law. Investors won't be able to sell or trade these shares during that time. This hold period helps ensure compliance with regulations and adds stability during the early stage of the investment. The offering will be done under exemptions from the usual prospectus requirements. It's open only to accredited investors across Canadian provinces and possibly in other regions where it's legally allowed. Like most placements, it still needs final approval from the TSX Venture Exchange before it's official. This private placement is part of Matador's ongoing plan to strengthen its role in the Bitcoin and gold markets while also building up other parts of its business. By diversifying its investments and focusing on both digital and traditional assets, the company is positioning itself for long-term growth. In December of 2024, the company's board of directors approved a purchase of its first $4.5 million worth of Bitcoin. Okay, a little kind of interesting, right? A little bit interesting insofar that the way that it's doing this warrant thing and this sale of a unit, which is a share plus a promise that you can buy more shares at a set price later, and then there's this, they're taking a bet and saying, well, if X, Y, and Z happen and A, B, and C also happens, then we've got the right to do this. It's very, very confusing, but at least it's a little creative. At least it's not just the issuance of senior debt notes. At least it's something a little bit different, but honestly, it's the same shit. They're just selling debt to raise money to buy Bitcoin. But in this case, they're buying Bitcoin and gold. And in this case, it's a Canadian company and not a Japanese or an American company. And speaking of American companies, Strategy indeed added yet more Bitcoin to their balance sheet, making less available for the rest of us plebs. 13,390 Bitcoin off the market for $1.34 billion, right as the price topped $100,000. Michael Saylor Strategy purchased fresh Bitcoin as the currency pushed above 100,000 last week. Strategy acquired 13,390 for $1.34 billion between the dates of May the 5th and May the 11th, so they were actively buying all last week. The acquisition has increased Strategy's total Bitcoin holdings by 2.4%. They now have a total of 568,848 or 40 BTC acquired for about $40 billion at an average price of $69,287 per coin. The new purchase, this one that they did last week, was made at an average price of $99,856 per BTC, with Bitcoin reclaiming the psychological mark of $100,000 on May the 8th. So Michael Saylor buying yet more Bitcoin. And I'm seeing a lot of chatter on Twitter. I do promise I spend most of my time on Nostr. I go over to Twitter so that I can essentially, here's the thing. What I love about Nostr is that what we talk about over there is more about each other and ourselves. There's a lot of cooking over there. There's a lot of people, posting pictures about their knitting, and like lots of really interesting things about science, and pictures from deep space, and of course there's a lot of Bitcoin talk, but there's a lot of permaculture stuff. I post stuff about soil all the time. It is a place to rest my mind. If for whatever reason I want to go see what's trending in the world, like I don't know, like Pakistan and India, going to blows, I'm going to go over to Twitter. And I got to tell you, the shit that I'm seeing on Twitter, and Bitcoin Twitter specifically, I'm going to admit it to everybody here. I've never seen anything like this before. This core versus knots issue is going to really destroy long-term friendships between people that I've known on Twitter. Not personally, but definitely on Twitter. I know these people from Twitter. I know who they know. I know who they talk to. I know how they talk to each other. And the way they're talking to each other right now is kind of frightening. The types of language being used between people that I thought were cordial with each other for the last, let's call it 6 years, is being blown apart. That language is being blown apart at the seams. They used to be nice to each other. They used to be cordial. They used to be respectful. I'm seeing people that I have respect for basically just shit can that respect with a couple of tweets in a row. I've never seen anything like this. Yes, even the 2017 block size wars, I've never seen this. I've never seen the kind of negative energy, the dark energy, the black feelings that I'm seeing over on Twitter about the core versus knots thing. And then this morning, there's a new flavor introduced into all that. It's separate, but it's about Bitcoin's going to die because Michael Saylor's buying Bitcoin. Bitcoin's going to die because the mempools are empty. Bitcoin's going to die because clearly core versus knots and spam and NFTs. And none of this shit is true. Every single, for those of you who spend that are listening to me right now, if you spend the majority of your time on Twitter, you are not doing your mental health any favors at all. I would rather have no engagement with any of my notes on Nostr than to spend more time than I already do. And I do not spend that much time on Twitter anymore. I used to be addicted to it, hours a day, right? I can't stand being over there anymore now that I've become accustomed to what goes on Nostr. That doesn't mean that Nostr is always going to be a place where you're not ripped into shreds by people who you thought were intelligent people. They're ripping me to shreds with their retarded bullshit over on Twitter right now. Nostr is completely different right now. Like I said, it doesn't mean that it won't turn into something else. But for right now, if you are finding yourself going to Twitter and just being inundated with dark feelings and negative feelings, especially about the Bitcoin space, then you need to bail out. You need to take a break. Go over to Nostr, please, for the love of God, go over to Nostr. If you are finding yourself having a hard time doing it, then you can simply go to nstart.me, NSTART.me. It will take you step by step. It'll take you 2 minutes to go through this step-by-step guide. It's got buttons like you complete a task, and it's like, go to the next thing. And then it takes you through the next thing and explains what it is that's going on. And then the next thing, and then the next. And by the time you're done, 2 minutes, 2.5 minutes later, or I highly recommend spending at least 5 minutes reading carefully. But it's not that much to read. The people that did nstart.me, that's nstart.me, did a fabulous job making things quick and concise. Go get your login information. And then right after that, for the love of God, go over to following.space and log in with your new nostr credentials, and you will be able to find entire packages of people that are like, okay, there's a whole package right here. There's 244 people in this one group. And none of the Bitcoiners are going to like this. But for like the guys of you that like Monero, that are on Twitter and want to get away from this bullshit, you can go talk to all your Monero friends, 244 of them, by clicking on Monero friends at following.space. There's a button after you log in. There's a button right close to the top that says follow all. And your npub, your account will automatically start following 244 Monero heads. And you're automatically dumped in. Try it. You've got to get off of Twitter. It's not doing your mental health any good. And last story up for today is also not the best, but hey, it's a cautionary tale all the time over here at Bitcoin. And teens have kidnapped a Las Vegas man at gunpoint. Kidnapped him at gunpoint and stole $4 million worth of his cryptocurrency. Stephen Kate warns us about wearing swag, although I'm not sure if that's what happened here, but from Cointelegraph. 3 teens, 2 Utes, if you recognize the inference there. 3 teenagers have been accused of kidnapping a man at gunpoint after he was returning from, yep, here it is, a crypto event in Las Vegas, before driving him an hour outside of the city and robbing him of $4 million in crypto and non-fungible tokens. According to police, the incident occurred last November, so it was a while back. The victim had finished hosting a crypto-related event in downtown Las Vegas, and when he returned home, the suspects forced him into a vehicle and drove him to a remote desert area an hour from the city. There, they forced him to hand over passwords to his accounts, according to May 10th reports from Las Vegas local news outlet 8 News Now. The man was allegedly told to comply with the teen's demands if he wanted to, quote, live to see another day, and because they also had his dad and would kill him, according to the report. It's also alleged that a 4th person may have been communicating with the 3 young men through a cell phone during the incident, which the victim could hear through a speakerphone. After having his accounts drained of $4 million of crypto and NFTs, the victim reportedly walked 5 miles through the desert to reach a gas station where he could call a friend for help. 2 16-year-olds from Florida are facing charges including robbery, kidnapping, and extortion in connection with this incident. A 3rd teen allegedly involved in the plot has left the country, prosecutors say. One of the young men is behind bars with bail set at $4 million, while the other has been released under house arrest with electronic monitoring. A preliminary hearing is scheduled for June, with both teens set to be tried as adults. Digital asset lawyer Sasha Hodder said on a May 10th Twitter post that this case illustrates how crypto theft is evolving. It's not just social engineering or SIM swaps anymore. Crypto industry participants are increasingly becoming targets for kidnappings and extortion. In a recent May 3rd case, the father of a crypto entrepreneur, was freed by police in Paris, France, after being held for several days in connection with a 7 million euro plot in kidnapping. In February, a UK crypto broker reportedly jumped 30 feet from a balcony to escape kidnappers who were threatening to torture and kill him if he didn't hand over $30,000 worth of crypto. Meanwhile, Jameson Lopp, a cypherpunk and co-founder of Casa, has created a list on GitHub recording dozens of offline crypto robberies all over the world. The first one dates back to 2014, when someone allegedly tried to extort computer scientist and cryptographer Hal Finney of 1,000 Bitcoin, which was worth $400,000 at the time. There have been 21 incidents of in-person crypto-related robberies so far just this year, according to Lopp's list. In 2024, there were 28 incidents, while there were 17 in 2023 and 32 in 2021. Stop wearing Bitcoin swag. None of the people that make Bitcoin swag that listen to this podcast are going to like me for this, but safety is on the line. For all of our brothers and sisters out there, you cannot go around doing shit like going to Bitcoin 2025 decked out in orange pants, orange socks, and a great big orange shirt with a white Bitcoin symbol on it, and a big orange hat with a huge other-ass white Bitcoin symbol on it, and then go get fucking hammered at a bar down the street all by yourself at 2 a.m. What I just described is the worst case scenario of the idiocy that you can perform yourself as a human being and not do any of the people around you that love and cherish your existence any good. So it's not just about you, it's about everybody that loves you, everybody that depends on you, right? While I describe the worst case scenario, it doesn't even have to be that. You could be completely plainclothed or plain clothed and walk out of Bitcoin 2025. That's it. All you have to do is be there, and you're a target. And by the way, do not think for an instant that it's just Bitcoin conferences that are like this. I'll bet you there's problems at like weapons conference, weapons systems, for like when people like the convention for like, here's our new system of how to kill a shit ton of people, and we got to figure out how to lit one of these off the chain. That's how our grandfather did it, and it's worked out pretty well so far. Weapons conferences. These guys are smoking rich, but they've got personal security now, don't they? That's why you don't hear about very many instances of that shit going on. The people that go to Davos, they're not any better off, right? It's not just Bitcoin guys. Right. What I'm trying to do is say, don't get scared. Don't just not go, but, take some security measures. And I'm not talking about paid security. I'm talking about make sure you're always with other people. Don't walk alone. And for the love of God, if you're going to carry a Bitcoin purse, don't. Just don't. Leave it in the hotel room. In fact, don't even take it with you on the plane. If you're having to fly in, don't pack it. Don't do it. I'm tired of hearing about people getting robbed of their crypto. I'm tired of hearing people getting kidnapped. I'm tired of people getting guns pointed in their face because they've got Bitcoin. Don't make yourself a target. All right? It's a brand new week. Don't do anything stupid. And I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.